This week starts off with stocks down big. The S&P 500 down 1.65% on Monday. The NASDAQ 100, the Qs as we fondly call it, down 3.25%. 20-year bonds up about 0.25%. Gold just barely up. Let's jump first, as we always do, into the S&P 500. Remember, we had 4 strong weeks of down movement after our weekly vertical crossover. That's the magic of the weekly vertical crossover. Those who don't know what that's about, we'll put a special training at the end of the video today. Those you're listening to our podcast, think you've made us number 4 in the world in stock market podcast. We thank you so much. Please go to chartingwealth.com and you'll see the special training on vertical crossovers. We actually have parts 1 and 2. You can find them at the website chartingwealth.com or our YouTube channel, Charting Wealth. We had 4 weeks of strong down movement. The week ending the 12th of October through the 2nd of November. Then the market went sideways, never moved above where it started moving down on the week ending the 2nd of November. And then starting the week off this week with a strong down move, 1.65%. Weekly, we see the price percent oscillator on the weekly chart heading down. Derivative oscillator still losing some downward momentum, but remember, price percent oscillator is our big indicator, very similar to the MACD for those of you who are new to us, and we'll put that training also at the end of today's program. You'll see a link to that. If you don't know what the price percent oscillator is, you need to. Very similar to the MACD, but better. What do we see going on as far as the 2-day candles go? Well, we had the weekend on Friday with a down candle, and we see a red down candle forming now. It's the first day of the latest 2-day candle. It will finish drawing on Tuesday, but again, another red down candle, down movement. You know what we could do, because it is bouncing off that signal line. We'll go ahead and move our down candle to, well, our down trend line to a new trend line from the old one. We had, what we basically do is when you're in confirmed down moves and you have something that violates that, we wait until we have another pattern that's set up before we redraw the next one. So we have a new pattern that is set up, and we will go ahead and start showing that. Nice to see that the price percent oscillator bouncing off the red signal line. So far, it's really been laminated on that, pretty close to it. Not enough energy, though, to push through it, which is telling, very important. And we see the derivative oscillator losing upward momentum. Now, again, just the first day of the latest 2-day candle. What do we see on the 4-hour chart? Well, again, 4-hour chart crossed over going down back on the afternoon of Monday the 12th, and of course went down until it bottomed out on the 15th, then up for a day and a half, and then of course cranking down, bouncing off that 2-day trend line. Well, actually bouncing off more likely the 50-period moving average, which coincidentally hit right there at the 2-day trend line, and of course started moving down. Derivative oscillator gained downward momentum. Price percent oscillator heading down. So again, very, very nice as we continue to watch things move down. Keep your eye open over the course of the day on Tuesday for a potential rebound. But again, remember, all things being equal, the market tends to move in the direction of the largest chart, which is the weekly trend, which is decidedly down, and that's beautiful. So we go from the S&P 500 to the Qs, where the real action is. Remember, those of you who listened to us over the weekend about what we were seeing with the Qs and how, you know, it was much more plain in its down movement. Well, you saw that being shown today, down 3.25%. Now, those of you listening for the first time, maybe not as sophisticated as some of the folks been with us for a while, you might be saying, why would you want to invest in anything that's going down? Because we're not practice trading in that. We're looking at something called PSQ or QID. PSQ is the inverse. It's the short of the Qs. And what does it do? It moves in the converse. It moves the opposite of what's going on with the NASDAQ 100. It's the short fund. It's going up as the NASDAQ 100 is going down. Adds a little level of sophistication. You might say, well, why aren't we tracking that? Because look, we stick with the Qs, the S&P 500, 20-year bonds, and gold. We're not going to follow those inverse funds and switch back and forth and confuse people. When we talk about getting into a down trade, we're talking about an inverse fund, or those of you who have a little bit more sophistication, perhaps a put, if that indeed makes sense, or just not being in it when it's going down and buying it when it rebounds and gets cheaper. Does that make sense? Absolutely. So, again, we're not a stock calling service, an education firm. We want you to practice with us. So let's jump into the Qs, heading down strongly for the day. First day of the latest 5-day candle, decidedly down. Price movement well below the weekly trend line. Price percent oscillator spiking over, going down. Derivative oscillator is flat. We go to the 2-day chart. What do we see there? Again, going into the fourth candle of down movement, first day of the latest one, derivative oscillator losing downward momentum, price percent oscillator heading down. And what do you think you see on the 4-hour chart? Strong down movement in the morning, even stronger in the afternoon. Beautiful after we had that crossover going down back on the morning of the 12th. Down strongly until it bottomed out around the 15th, then up for a day and a half, and then rotating back over, going down strongly. Derivative oscillator gaining momentum, price percent oscillator heading down. Things are looking beautiful. Continue to watch and pay attention. Of course, all things do come to an end, so pay attention, remembering that the trend is your friend until the end, and the trend is decidedly down. So we're in that inverse practice trade. We go to 20-year bonds. 20-year bonds are in a confirmed weekly vertical crossover going down. However, is that ending? Looks like we're going into a second week so far of up movement. It's just the first day of the latest candle, but price movement is pushed through over the prior week through that weekly trend line. And we see that the derivative oscillator is losing downward momentum. Price percent oscillator heading up on 20-year bonds. What do we see going on? Now, that's sort of what you would expect, right? You would expect bonds to go up when stocks go down. That's what we're seeing. Should make you feel pretty good that, yes, that's what we would expect to happen. We had a 2-day vertical crossover going up back on Monday the 12th. And we're going into our, well, after things close tomorrow, 8th day of up movement. If it keeps going up, derivative oscillator gaining upward momentum, price percent oscillator heading up. And again, we don't have a trade at this time. Why? Because the weekly's still in a confirmed down move. Until that changes, we will watch and wait and see if there's going to be enough upward momentum to drag that weekly over, because remember, the weekly and the 2-day have to be moving in the same direction so that we can then look for a trigger event on the 4-hour chart so we can get in. Now we see that the derivative oscillators continuing, well, had been losing downward momentum until the afternoon on Monday. Price percent oscillator, of course, has kicked up. So again, we see strong up movement there. We'll wait for things to sort out on 20-year bonds before we do anything. Remember, we are trend followers. We want strong trends that we can safely follow, or follow as safely as possible. What do we see on gold? Gold crossed over going up back on the 5th of October. Went up nicely for 3 weeks, then sort of sideways and down for 3 weeks. Again, never crossing over, going down. Derivative oscillator losing momentum, but that price percent oscillator still heading up. Started the week up a little bit, 0.04%, but we see a green open box candle. 2-day chart, what do we see? Going into possibly the third candle, at least 5 days now of up movement. Price percent oscillator tracking ever closer to the red signal line. Derivative oscillator losing downward momentum. We'll see how that candle finishes up on the 2-day chart tomorrow. That is at the close of the market on Tuesday. And we can, of course, see some up movement in the morning and the afternoon. Derivative oscillator heading up. Price percent oscillator heading up. Looking interesting. So again, we'll wait for things to sort out in gold. Also, our trades, of course, right now are in the Qs most strongly, and in the S&P 500 on inverse trades, inverse practice trades. That's where we are, folks. You've not purchased our book, we'd love to have you buy it. You'll see a link in the show notes to do that. And if you would like to sponsor us, help us, promote us, on Patreon, we would sure appreciate that too. Lots of great bonuses there, including for that intermediate level, a 15-minute once-a-month phone call for some specialized training for you. And also on the entry-level support, we have a monthly Q&A session, helping you go over the stocks that you're interested in, helping you see what's trackable and what's not, so that you can practice trade those also. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.